What can you buy in an SMSF? And this is ATO approved. I know you can buy property. I'm gonna go buy a holiday house and I'll just keep it over there and no one's gonna know about it. Well, the tax office says industry super funds are saying that when you retire, you will need $600,000 for a single person and about $700,000 for a couple. I don't know about you, but I don't know how long that's gonna be lasting. Let's say you had $100,000 sitting in your superannuation fund, and let's assume that you're putting in $500 into your superannuation every single month. Your portfolio, I'm gonna have to count the zeros. I'm Matthew Fraser, and this is Crypto Collective. After making millions with Amazon and e-commerce, I realized that if I was starting again today, crypto would be my first choice. I'm here to help you take your first steps and build real wealth. Ready to set yourself up for life? Let's go. Hey guys, welcome to the Crypto Collective. My name is Matthew Fraser, and in today's episode, it's gonna be one of my favorites and hopefully one that you can look back on for many, many times. It's about SMSFs, what you can and what you cannot buy in a self-managed super fund. So for most people, they think of SMSFs are just for buying shares and property, but let's break down exactly what you can and can't buy. So guys, I just want to say from the outset, I know you won't be able to believe it, but I'm not an accountant, I'm not a financial advisor, and I'm not someone who's a ATO tax agent. What I am is someone who holds multiple seven figures of mainly Bitcoin and some crypto. And I also have my own self-managed super fund. And what I've discovered is there's people that have a lot of myths out there, and that's why we put this together. And I want you though to just use this video as a guide only. Go seek your own financial advice. Now, I only just came across this just the other day, and this is some interesting facts about SMSFs, and that is that the adoption rate is growing massively in Australia. That's why it's so important I put out this information for a lot of people, because no doubt there's many people thinking about adopting an SMSF and taking control of their own future and their own money rather than leaving it in an industry superannuation fund, which has done poorly, but we'll get into those details in a second. What's happened though is from 23 to 24 financial year, the amount of SMSFs actually doubled in Australia. And that's why it's so important to talk about this topic. So let's start with what you can't buy. Now, this is interesting because when I first set up my SMSF with my accountant, I said to him, hey, can I buy this and can I buy that? And he said, no, 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 no. And so the first thing is your home or a holiday house. This is something that you can't buy in an SMSF. A lot of people would like to think, you know what, I've got a great idea. I know you can buy property in SMSF. I'm gonna go buy a holiday house and I'll just keep it over there and no one's gonna know about it and we'll just go use it on the weekends. Well, the tax office says absolutely not, you cannot do that. The other thing you can't do is buy cars, boats, or luxury items like Louis Vuitton handbags. You can't buy art, wine, collectibles, if you enjoy those types of things. This was another question I put to my accountant. I was like, you know what about if I just buy like a vintage Ferrari F40 or something for like $2 million? And I don't even have that much in the super, but let's just say you did. And the answer is no. And what was interesting was you simply cannot buy something that you can use yourself, which is, look, I think it's bad. I don't write the rules, but apparently in the olden days when superannuation and SMSF was really happening back in sort of like the late 90s, people would buy cars and holiday homes in their SMSF trust, and then they would just use them on the weekends. They'd buy paintings and all sorts of things. And eventually the tax office just cracked down, rightly or wrongly, I would say, wrongly, and just said, no, you can't use those things, okay? I mean, my argument would be, well, why can't you use a holiday home? You know, the holiday home is still standing there. It's not like you're taking it with you. Yeah, you're using it, but it's still within the SMSF trust. Anyway, you're not allowed to do that. So it's basically anything that cannot be held at arm's length, okay? That's what you cannot hold in an SMSF. Okay, so what can you buy in an SMSF? And this is ATO approved. And the first thing is you can actually buy property, residential or commercial property. Now, it must be used again for investment purposes and not personal use. The other thing, which probably most people think about, is you can buy shares. So they can be Australian Stock Exchange or international type shares. ETFs and managed funds are also available. Now, ETFs is exchange traded fund. Bonds and term deposits, they're okay too. And precious metals like gold and silver. And the one thing that you can buy that most people probably don't realize is you can actually buy cryptocurrency. Now, when I say cryptocurrency, I mean that in a broad term, but I would break it down and say you can buy Bitcoin and other altcoins. Now, that being said, I only hold, I mentioned before that I have an SMSF. I've moved all of my funds from my industry super fund into an SMSF and I've purchased Bitcoin. Nothing else, only Bitcoin. Let me tell you that if I come back to this story that only just came out yesterday, that's what a lot of other people are doing. They're taking their funds out of the industry super fund, they're putting it into an SMSF and they're buying cryptos. There was a gentleman in this actual article called Timothy Yang. What was interesting, I found a similar story, is he looked at what his annual compounding rate was within his superannuation fund. It was about 8%. Now, they actually said that in this article, they said that was pretty solid. To me, if I was getting 8%, that would be devastation. I would not want to have just getting 8% because it doesn't even meet the hurdle rate. Now, the hurdle rate in Australia is probably somewhere between, depending on which economist says, 14 to 15%. That means you've got to be earning at least, let's say 15% to be at least breaking even. So therefore, Timothy Yang looked at it. He got his 8%. Now, what did he get by moving his funds over to crypto? And it actually says here, he got 75% gain compared to 8%. That's what we're talking about. Now, I know what you're going to say to me now, Matt, well, you can't put it into cryptocurrency or Bitcoin. It's too risky. It's too volatile. Yeah, there is a risk. Absolutely. And yes, it is volatile. And the volatility is not just in the downside, but it's also in the upside. And that's why we saw, or Timothy saw in this story, that's why he saw a 75% gain, because it was volatile to the upside. Personally, I don't hold anything except for Bitcoin. So for me personally, I think everything outside of Bitcoin has a much higher risk, like the altcoin. So Ethereum and Solana and the list goes on. That to me has a much greater risk, which I'm not prepared to take, and I don't need to, because Bitcoin is the number one asset. Now, if you look back in history, I'm going to talk about in a second, it's been the best performing asset. So therefore, that's why I only hold Bitcoin in my own self-managed super fund. Now, there are some caveats when it comes to cryptocurrency and holding it in the SMSF. And this is according to the ATO. One, you must still be compliant. So you can't mix some of your personal Bitcoin, let's say, into your self-managed super fund Bitcoin. They just cannot merge. You've got to keep it separate. Now, if you go to a place like CoinStash, which is a local Australian exchange, one of the top exchanges in Australia, you can create separate accounts within the exchange. So you could have your SMSF account there, plus have a separate internal account for your personal or your business. And therefore, because it's separate, it's compliant with the ATO. So I've just given you some insight into Bitcoin and with Timothy Yang and his story where he saw 75% in 1 year. Now, you're right, he might not see 75% the next year. Maybe it's 15%, maybe it's 20%, maybe it's 5%, we don't really know. Maybe it's negative. But let's look back now and compare if you were to put your money into something else like the ASX. So let me share with you then ASX over the past 10 years. It has seen an 8 to 10% return. What about property, you ask? Property has gone through the roof. We can't even get into property anymore. But what have the actual returns been over the past decade? Only 6 to 8%. What about gold? I hear you say, no, gold right now is going absolutely crazy. At the day of recording this video, it's seeing all-time highs in the gold markets. But what has it done over the past 10 years? You're gonna put your head down now, 1 to 2%. That is it. What about bonds? Safe and secure bonds, right? Well, they've seen 2 to 4% over the past 10 years. Now the question is, what about Bitcoin? What have we seen over the past decade? Well, we already know that Bitcoin is the best performing asset in the last decade, but what has the actual return been? Well, wait for it. The average return for the past 10 years is 200%, right? Is your jaw like on the floor right now? Could you imagine if you just look back now, if you didn't have your funds now in getting 6 to 8% industry super fund, but you actually had it allocated to Bitcoin, where would your position be? So guys, let's have a look at the numbers. I'm going to give you the exact numbers on my compound interest calculator to see what it compares against. Now, let's assume, just for round numbers, let's say you had $100,000 sitting in your superannuation fund. So let's say it was sitting in shares, right? That was between 8 to 10%. So 10% over the past 10 years. And let's assume that you're putting in $500 into your superannuation every single month. Your end result would be $373,000. Let's say, obviously these are going to be worse, but let's say it was property at 8%, $313,000. Let's say you had it sitting in gold and you got the highest of the average and you got 2%. Your $100,000 is going to be now, after 10 years, 188%. And I know what the next question is you're going to ask me. And so now let's look at bonds. Bonds was, the best case was 4%. Your 100 is now $222,000. Wow, fantastic. You're going to say to me, yeah, but Matt, although gold was crap and it was only 2%, you know, we'd have a diversified account. And I hear this from financial advisors who like to attack me now on social media, which is fine. Bring on the attacks. I want to hear the argument. They say, yeah, but Bitcoin's too risky. And, you know, what if it goes down? Yeah, well, these things happen. But what happens right now if shares go down? Right now, shares have gone down, right? We're in a trade tariff war. The market's a bit skittish. There's nothing certain about any of those things I've just mentioned. Gold, well, gold is probably the second best one, which is probably a bit more certain. But things like stocks and shares, they're all based on companies. Their returns can go down, their stock price can go down. So if we go now to Bitcoin at 200%, well, you know this is going to blow you out of the water. Oh, God. So at 200% average per year, your portfolio, I'm gonna have to count the zeros. I think it's a lot. Put it that way. I think it's actually 11 billion. I think that's what it is. I could be wrong. 11 billion. Yeah, I think it's $11 billion. Okay. And I can see you now, right? Some of the skeptics out there are gonna be laughing. That's rubbish. It could be 11 billion. You can just go to any place right now and you can find stories about people who bought Bitcoin many, many years ago who are now sitting on millions, if not billions of dollars. In fact, I only just met someone just the other day who put $20,000 into Bitcoin and it's now sitting at $4 million. So these things do happen. And hey guys, just quickly, if you've been thinking about using your self-managed super fund to invest in Bitcoin or cryptocurrencies, but don't know where to start, or you don't want to deal with the complexity, you need to check out CoinStash, today's sponsor. They make it easy to set up your SMSF account so you can access digital assets like Bitcoin on a trusted Australian platform. I personally use their platform. It's secure, intuitive, and fully compliant with Australian regulations. Best of all, their team walks you through the entire account opening process, step by step, with their same day, seamless and fast onboarding experience. They even work with a bank so you can manage your SMSF transactions all in one place. If you want to take control of your super and start building your crypto portfolio properly, use the link in the show notes to book a free call with their SMSF team. Now back to the episode. Point I'm trying to explain to you though is that I'm just trying to compare the timeline and the different assets, okay? Now you're gonna say to me, okay, well look, that's great, Matt. It's 200%. We've all missed the boat now. We didn't have our superannuation allocated to Bitcoin, unfortunately, but we're not gonna do it now because it's still too risky, yeah? Or it's too high, or it's a scam, or it's a Ponzi scheme, right? Now, I hear you. Let's just say though, that you don't do what I've done, which is convert all of your superannuation to Bitcoin. And I'm not saying that you should do that, okay? I'm just giving you the options of perhaps you might consider it. Perhaps so, let's just say you've got $400, $500, or even $200,000 of superannuation. And perhaps now you might want to consider allocating some of that into Bitcoin. Because I think the risk right now is, the risk is having no exposure to Bitcoin, right? Rather than having exposure to Bitcoin, yeah? Because the potential gains are so great that you'd be nearly crazy not to have some of your portfolio allocated to Bitcoin. Outlooks for the future, yeah? Let's talk about what the outlooks are. So with Bitcoin, we've got ETFs are now here, right? ETFs are exchange traders funds, and you could now, you could surely allocate funds into an ETF, but I don't know if they're going to see the same returns. We're going to have to wait and see on that. But what I can tell you though is that has now attracted mainstream adoption with Bitcoin, plus also a lot of positive regulatory frameworks, certainly in the US and other countries. You've got Trump who's obviously advocated that he wants to have a Bitcoin reserve. There's other countries around the world that are allocating now to Bitcoin. And what we're now seeing is a FOMO of nation states. So a fear of missing out from nation states who are all now trying to pile into Bitcoin, which will ultimately drive the price up. But you're going to say, Matt, that's great, but it still doesn't say what the price is going to be. Well, now, I've done a lot of research, and I can tell you that one of the spokespersons, you could say, one of the Bitcoin evangelists in this space, Michael Saylor, he holds a lot of Bitcoin. Now, he's predicting a 30 to 50% annual compounding rate for the next 20 years. So let's just use those rates when we're looking at over even the next 10 years, just to compare apples with apples again, having looked at the previous 10 years. So let's say we go on the safer side, we say Bitcoin's going to see a 30%. That will mean that your $100,000 would now be worth in 10 years' time $2.3 million. Can I just say that the industry super funds right now are saying that when you retire, you will need $600,000 for a single person and about $700,000 for a couple. Now that is considered to be what they call a comfortable lifestyle. I don't know about you, but I don't know how long that's going to be lasting. On top of that, you've even got people like Mark Burrows who are saying people are going to run out of money because people are living longer. So even if you did have, say, $700,000 as a couple, you're going to run out of money. So Mark's unfortunately saying you're going to have to you're going to have to work maybe until you're 80 or 90 years old, because otherwise you're just not going to have enough cash to live on in your retirement, which is quite mind-boggling. I think we've never really come across such a situation. So the positive is you're going to be living longer. The downside is you may have to work longer because you're not going to have enough superannuation. So therefore, this is why it's so important for you to take note of this. So if you did have your $100,000 allocated to Bitcoin at the worst case scenario, let's say of 30%, you're going to have $2.3 million. So therefore, you're going to be well and truly above what the industry standard is right now of even $600,000 or $700,000. And therefore, you actually could probably retire, right, and not work until you're 80 or 90 years old. Let me just throw in another number for shits and giggles and say, let's say I did a 50% compounding. Keep in mind the last 10 years has been 200% average. Let's say it's 50% average. That would then take you up to a $15 million retirement in just the next 10 years, right? Now, if you're like me, I've got another really 20 years of work until I get to my mid 60s. So let's just say I compounded that Bitcoin for another 20 years at 50%. That would take me up to $2 million. So that's just $100,000. That's all it is, not every single cent. Now, I've got a lot more than that. So if I just want to add some other numbers in there, let's say you actually put $200,000 into Bitcoin of your super. That would take you up to $38 billion in 20 years at 50%. So as you can see here, the numbers, no matter which way you slice it, it's going to be very positive for you when you're thinking about retirement. And now, unlike what Mark's saying, you're going to have to retire at 80 or 90. You could now actually look at retiring much sooner, if definitely by 65, if you've got another 20 years. Let's go and have a look. So let's talk about what are the other things though that you could invest in and what the outlook is for those, right? So the property, yes, you could invest your superannuation into property. It's slow, but it is what I would consider stable, but it's not going to, I guess, 10x what Bitcoin is going to do in the same amount of time frame, right? You're also going to have the issue of ongoing maintenance and fees with property. I can tell you, as someone who does hold some property, you're going to potentially pay land tax if you're holding it in a body corp structure. You're going to have to pay body corp fees. There's going to be rates. So what's going to happen is as you get your superannuation, it's going to also have to leak out in ongoing maintenance and taxes. Okay, and that's just the reality. Compared to Bitcoin, there's no ongoing fees, there's no tenants, there's no repairs, et cetera, et cetera. So you have to think about that. The other thing you could invest it in, of course, is shares. Traditionally, I guess, yes, they are considered safe, but completely saturated. And benefit, of course, with shares is that they don't need ongoing maintenance, much like Bitcoin. Now, let me circle back to Bitcoin. Bitcoin, the benefit with Bitcoin is it has a limited supply and it has increasing demand. That's really all you have to think about. If you really want to go a little bit deeper, consider it like digital gold, okay? It's a place for you to store your capital and watch it compound and grow over time. It doesn't require watering. It doesn't require ongoing taxes, much like property. And so that's why I think a lot of people now are realizing the benefits of putting their money into Bitcoin, only because they're kind of forced to, right? They're forced to. They don't want to work until they're 90. And that's pretty much the reason. So you can see younger Aussies, and as I've just said to you before, with the report from the ATO, so many more people now are creating SMSFs. Now, if this is of something of interest to you, I do have a free guide that's in my community. All you have to do is find the link around the video somewhere. I'll show you exactly how to set up an SMSF. Keep in mind, I'm not an accountant. I'm not a financial advisor. I'm just someone who's got millions of dollars invested in Bitcoin and all my supers in Bitcoin. So I'm just telling you this from my own personal experience. And I'm just happy to share with you the steps that I took in order to grow my wealth into the future. So as the ATO has already reported, there are so many more Australians that are now coming into SMSFs, taking control of their own financial future, because they've realized now that leaving it in the industry super fund is basically a complete waste of time, because they don't want to have to be working until they get to 80 or 90. That's just the facts. With Bitcoin, it's an asymmetrical exposure, right? It's an asymmetrical asset. It's an asymmetrical bet, right? Which is basically there's more upside than there is risk when it comes to Bitcoin. And if you think about some of the things I said before, you may not need to have all of your superannuation, right? If you don't have a complete 100% conviction like I do in the Bitcoin asset, you can't afford not to have some exposure though. So maybe of your entire super fund, you slice off a portion of it, you create your self-managed super fund, you buy Bitcoin. Now you have exposure, because while what you can basically guarantee is that your industry super fund is not going to provide you the retirement that you want, right? That's guaranteed. What are you going to do about it? Bitcoin, in my opinion, is the answer. Now, if you want to know more about some of the stuff that I'm doing, and I'm just sharing this with you from my own personal experience, right? Who's someone who's got multiple seven figures in Bitcoin, who's got all my super in Bitcoin. I want you to simply to have the same future opportunities that I've got, right? So if you want to learn how to do that, you can find the link around in my description somewhere. And all I do is I show you the steps of how I did it. I'm not a financial advisor, I'm not an accountant, but I certainly want to see you succeed into the future and not work until you're 80 or 90. I mean, that's a joke, right? All right, look forward to seeing you then. Thanks for joining me, take care. Thanks for tuning in to Crypto Collective. If you've enjoyed this episode, the best way to show your support is to leave a 5-star review on Apple Podcast or Spotify, and make sure to subscribe to the YouTube channel so you don't miss an episode. You can also find more of me at I'm Matthew Fraser on all social media platforms.